DeFi and stablecoin yields will be our next panel. And if you can warmly welcome our speakers onto the stage as I bring them up, it will be so appreciated. Our first speaker to enter on stage, and I'm just going to ask our previous speakers if they can bring those conversations out to the hall so we can make space for our next panel. Thank you so much. So first on stage, Brian Crain. Can you please come up? He's a co-founder and CEO of Chorus One. Oh, such a great crowd. Christophe Celle, CCO of Selini. Welcome to the stage, a proof of talk. Louis Laszlo, CPO of Meria. Welcome. And last but not least, we have an amazing moderator, Xavier Gomes, COO of Vancelian. Enjoy.
Thank you very much. This is more or less the end of the afternoon in Paris. Thank you to come on one of the most, I think, interesting panel, because a lot of people looking for yields, you know, to earn money. Welcome to DeFi stablecoin yield opportunities and risk for investors, B2B and B2C investor, of course. Thank you for my panelists to join us in Paris in Proof of Talk. Let's introduce yourself. What is your relation with the business? What is your background, and why you are in Web3 sector? Brian, please.
Yeah, thanks so much for having me. So my name is Brian. I've been in crypto for around 12 years, and I've been building Chorus One for 7.5 years. We're one of the leading staking infrastructure companies, so we've been kind of helping people earn yield on their crypto assets for quite a while. Now, I think maybe when it comes to this particular topic, of course, staking is sort of, almost like the interest-free base yield rate. So we've been involved in this in that way, but we've also been doing more kind of using DeFi protocols ourselves with our own treasury, and then also launching some products where customers can basically combine some DeFi strategies with staking to earn higher yield. So we've been kind of exploring this area in a few different ways.
Thank you, Brian. Christophe?
Yeah, thanks. And I just want to say thanks, guys, for the afternoon energy. It's very impressive. So my name is Christophe. I'm the Chief Commercial Officer at Selini Capital. We're one of the leading trading and investment firms in crypto. So very active across HFT, market making on exchanges, market making for token projects, venture, and OTC. My own background originally is sort of hedge funds and TradFi. But I've been in this space since 2016 to 2017. Kind of stumbled into it through fintech originally, but more recently I worked at Binance, where I led their institutional business, and after that I was at a family office in Zug, the beautiful crypto valley, where we were basically running a crypto-focused family office.
Thank you, Christophe. Laszlo?
So Louis Laszlo, and good afternoon, everyone. So I'm the CPTO at Meria. So Meria, we have two different activities. First activity, we have a crypto investment platform in France, a custodian platform with a license to operate on a compliant way in France. And second activity, we are also a staking provider, so quite a competitor to my friend Brian. So we offer staking on-chain directly for individual anywhere in the world, but also in white label mode for exchanges, wallets, VCs, and so on. So we are in the yield generation business with all my friends here today, and very, very happy to be here to cover the landscape of DeFi protocols in 2025.
Thank you, Laszlo. Myself, Xavier Gomes, I'm Chief Operating Officer Group of Vancelian. Vancelian is a fintech, wealth tech, based in France, in Nice. We provide investment solution for B2B and B2C based on blockchain technology in order to democratize the access to real world assets, tokenization, crypto trading, and also Vault. And you can check all the product on the website. Thank you, gentlemen. Let's start. We will try to give to the audience an outlook of DeFi today and the relation with yield, because as I mentioned at the beginning, most investors, corporate, banking sector, and personal investor trading were looking for yield, in particular in Europe with a low rate. This is another story in dollar world. But what do you think about the DeFi yield evolution in terms of risk return today?
I can kick it off if you want. Let's not be shy. I mean, listen, DeFi, to answer your question, is obviously a really interesting space at the moment. I think we'll touch upon it, but we've seen the compression of yields on some of the larger platforms. You know, everybody, as you said, is kind of searching for yield at the moment. And we've also seen the introduction, kind of the adoption in a broader way of RWA, and I think we'll dive into that a little bit as well. I mean, there's always risk correlated to return, regardless of the investment, and that also goes for DeFi yield. But I think there's definitely been a big progression when it comes to sort of the institutional grade development of DeFi solutions in the space. So we've kind of moved away or moved beyond just like a niche set of protocols that people were like using to something a bit more scalable. And so we're seeing this initial institutional adoption in the space and a larger, I'd say, range of DeFi solutions and yield products.
Your point?
Yeah, I mean, so I think if you look at DeFi yield, first of all, there is a kind of base yield you can earn on DeFi, which is probably pretty comparable to what you can earn in the traditional financial system. So let's say you take your stable coins, deposit it in Aave, what do you earn, like 4 or 5%, right? It's pretty comparable. But then what you do have, and which is I think one of the unique and powerful features of crypto, is that you can say, hey, I will create some protocol and I'm going to use my token to kind of bootstrap it and get it off the ground and incentivize people and build network effects. And of course, in the end, what is the most important thing for many of these protocols, certainly DeFi protocols, it's liquidity and it's capital and TVL, right, and activity to some extent, right? So of course, all of these protocols basically say, hey, we are going to take a significant part of the token, which is sort of all the future value that the protocol claim on all of that, and we're going to pay it to people providing liquidity in the short run. And I think that yield is, that allows you to earn a lot higher yield in DeFi than maybe you can earn outside of DeFi. But of course, it does have some consequences, right? It means you have to go to often like newer protocols because as they age, they stop doing that. And it means taking some additional risk because, maybe it's not secure enough. And I think another thing that those kind of opportunities have in common is that they generally don't last, that long, right? Maybe it lasts 3 months or 6 months or even shorter at times, but it's not like staking, right? Where you can just go and, you stake your coins and then it just stays there for years, right? Generally, you have to have a lot more like active monitoring and changing of those positions, but I think those opportunities do exist, and then you can earn, much higher yield than in TradFi. I mean, you can earn certainly north of 20%, I think without taking a huge amount of risk, but with requiring a lot of active involvement.
Laszlo?
On top of that, to complete the two previous points, I think in 2025, thanks to the different technology evolution we have seen on the last months, last years, all the assessments between yield versus risk capabilities are more transparent than ever. So if you take a look back, it's more easier for any investors to have a better view and better understanding on who is providing the yield, how the risks are distributed, which collateral are behind this offer, and so on. And people, solution like Morpho, solution like we have different technical solution arrived in the DeFi ecosystem in the last month, offer a better view and better understanding on the consensus of yield capabilities against risks. And that's why we see more and more traditional investors, TradFi investors, institutionals coming and looking on a more serious way DeFi as an alternative to the TradFi yield capabilities.
Sorry, your first question has now launched us. We're on autopilot now, Xavier. But I just wanted to add one point actually to what Brian was saying and to the last point. The yield game is obviously changed quite a bit. So you have bots now, you have industrial farmers. So it's a little bit more challenging, and at times it's also challenging to find teams that have like early market product fit that can take on size, and when you have these kind of like protocols that are promoting through different incentive mechanisms at the beginning, so it's a little bit more challenging. But there are, as you're mentioning, like products like Morpho that are kind of really neat. You can create sort of curate different solutions. So it's a bit, as I was saying earlier, it's kind of like a bigger diversity set that you can choose from.
For the future of DeFi yield, do you see more traction from corporate or from private investors in terms of business traction?
That's like a really interesting question. So I think when you're talking, let's look at it as kind of in a broader way. So not just DeFi yield, but like DeFi as a whole. And I think when you say corporate, you may be referring to like institutions. There's a real trend and willingness to approach TradFi and DeFi at the moment. Some of the banks are looking at like not necessarily from like a yield and investment perspective. They have these like really clunky legacy systems, and they're thinking about DeFi in like a workflow way. When looking at investments, I think there might be a little bit of frustration when you're looking at the rate of innovation in the space. There's all these solutions that are being rolling out, like we pointed out, but the institutional adoption, and what I qualify as like real institutional adoption. I'm not talking about family offices or high net worth individuals, which have been the institutions so far in crypto up until recently. I'm talking about the pension funds in the U.S. and endowments, etc. People have to understand that their risk tolerance is way lower, right? So we need, I think, to see a bit of development when it comes to like the legal enforceability of contracts and the regulatory side of things for them to really come in at scale. But to answer your question, sorry, that was a long-winded answer, but yes, I think there'll be adoption, but there are a few headwinds that we need to get past first.
I think, so to complete your view, I think corporate or institutional adoption will come with hybridation of yield generation. So the capability to bring the best of the yield from the different capabilities, staking, liquid staking, restaking, pure DeFi, but also hybridation with real-world assets, hybridation with traditional TradFi product. And I think some peoples and some protocols are working on that right now to offer the best of the yield with the lower risk possible. And I definitely believe that corporate and mass market corporate adoption will go through hybridation yield products instead of 100% crypto lending protocols through IV or whatever.
Yeah, Laszlo, you talk about risk, and what are the main risk facing? What's the main risk facing investors seeking yield in DeFi?
So there are many risks to cover and to mitigate. One of the first is a technological one. When you are looking at DeFi today, you are looking at smart contracts at the end of the day. even if they are audited, there is still a risk of technology risk around smart contracts about hacking. You have a risk of collateralization. So that's why we touch a point about looking at what is covering your DeFi position, what strategy, which vaults are behind the DeFi protocols. You have risk of compliance also. We touch a point about corporate or institutionals, depending the geo, depending the compliance framework applying to your geography and your organization, maybe there is a risk for compliance. And I think I let some other risks to my friends today, but there are a lot of risk to mitigate and to assess in DeFi. But I think the technological one and smart contracts is one of the most important one. But
yeah, impermanent loss depending on the strategy. So it's basically when you're in a supplying capital in an AMM, and yeah, I mean, I think in terms of my understanding or my sense is that in terms of quantifying risk, is it's extremely hard. So like, how do you quantify the risk of like the smart contract being hacked? Like, you know, very difficult.
This is the main subject, you know, when you see some comments in newspaper, TradeFi versus DeFi. Don't touch that because it's not clear. They don't take the time to learn, to sharpen the skills about that, to see what is the risk, and they don't have the more or less the expertise.
Yeah. So I mean, maybe some people are more sophisticated here, but my impression is that even people who engage in it like very, very actively and professionally, they don't really have a way to like price the risk here, but they will just use sort of simpler heuristics like, okay, don't put more than 10% in a particular protocol, and don't be more than X size of this, or maybe like don't go into something that is less than this many months old, or had this much capital in there, or like, require these security audits, or, you do this kind of like checklist, and then you can feel like, okay, this is kind of managing the risks. But I think in terms of pricing risk, it's super hard.
Yeah, it's definitely very difficult. And as you were saying, like you can apply some sensible portfolio management, diversification, and an approach. And I also know a few crypto hedge funds that are using DeFi insurance in a smart way. So that's pretty neat, but it also has some limitations. And if you want, again, the real institutional guys to come in, it'd be great to see like an AXA offer a DeFi insurance product. I think maybe far from that today, but it's not impossible in the future. I just want to go back to a point that you were mentioning earlier in terms of like institutional adoption. I think another point that would really sort of help that trend is to offer products that people are familiar with. So I don't know if anybody in the audience is active in crypto hedge funds, but if you're going to launch your crypto hedge fund, really you want to launch a Cayman structure because all the allocators are familiar with Cayman hedge funds in the TradFi world. So like it's already hard enough to pitch a crypto hedge fund. Don't make it complicated by having some funky structure that no one's ever heard of. So when it comes to DeFi, I think the gateway is really going to be, when it comes to institutions, it's been the ETFs. So we finally have real institutional investors that are allocating to crypto. Very simple Delta One product, ETFs, that's fine. Next step, okay, well, let's look at this DeFi thing that everybody's talking about. And if we see increased RWAs, so the hybrid angle that you were mentioning earlier, I think that's going to be a really helpful gateway for institutions to get involved.
Laszlo, about the risk, what is your method, the strategy, because you have a lot of clients with 1 million of assets under management, or do you manage that with your client to expect to the final client? Because at the end of the day, most of the client, non-corporate, not investment firms, they're looking for the yield, and they don't look the risk.
So we've tried to build a matrix assessment to audit and to make some due diligence. So to cover the technical risk, to cover the collateral, to cover from where is coming the yield. So we try to create a matrix to score all the risk, but as we say, it's quite difficult. So we reduce at the lower possible the risk, and at the end of the day, it's lower also the yield we can offer. And at today, sadly, we remove a lot of offers because of compliance. So in Europe, I don't know if everyone is concerned or is aware about that, but in Europe, for centralized platform covered by the MiCA framework, we cannot offer any more yield on stablecoin for now. So we remove a lot of DeFi product from the Meria platform. But to cover that, it's as I say, it's a very difficult journey to assess the risk and to create a meaningful framework to assess the risk. And at today, all the offer we have offer on all the product we have offer on the Meria platform was only not as big yield than can be expected by end users, or you can find directly on chain because of the risk mitigation we have to take as a centralized player.
Yeah, I mean, it's maybe interesting actually to look at staking here, which is not exactly the topic, but I think where you have much more maturity and you have much, like the risk is a lot less and there's more like known ways of handling with the risk, right? It's like one is like, okay, who's the counterparty, how long they've been around, things like security certification like ISO, and then having things like insurance, or having things like SLAs to be like, okay, you know, if there's some incident, you're going to reimburse for some of the lost rewards. So I think you have a lot of like maturity on that side, but then of course, as soon as you go on like fully in like DeFi protocols, then I think it gets, you know, much harder. I do think at some point, right, insurance can play a big role here, but that's probably still pretty far away. Because I think today, if you're going to have, you know, insurance companies price the stuff, I think they, you know, they will probably tend to be very conservative. Of course, you have a big adverse selection risk as well, right? If you were to insure like DeFi stuff, then, you know, maybe someone has insider information that this thing is actually vulnerable and then they get insurance, but like otherwise they don't. So I think until you be able to have like real insurance there, I imagine it's probably like many years away. That would actually be, you know, priced in a way that it would make sense. And I think Nexus Mutual, to give an example, right? They've been around for many years, offering insurance for, you know, crypto, but they do a lot of like on-chain stuff. And I think the total claims they've paid out is like $18 million at this point, right? And that's, of course, a tiny percentage, even of the amount that gets lost in hacks every year. So it sort of, I think, illustrates how immature that still is.
If we come back to the adoption, in particular institutional adoption, is institutional capital still hesitant to enter DeFi, or are we starting to see a real on-chain position from TradeFi players?
I think we're seeing some like initial interest, but as I was saying earlier, I think one of the key points is the kind of defining the legal enforceability of these products, right? For institutions, again, their risk tolerance is a lot lower than what we're used to in the crypto space. So a crypto hedge fund is nimble and they can be kind of very creative and get involved with, I guess, protocols that are a little bit more niche. For a big institution to come in, it's a little bit more difficult, right?
Do you mean what is the main barrier? From your opinion, it's not enough regulation or tough regulation? Because we will see soon a fight between European and US regulation, I think so, between MiCA and the new US statute.
I think it's a combination. I think it's like regulation, and regulation is moving in the right direction, to be fair. But you know, they want to be reassured, like, you know, about the counterparty risk of these trades and getting involved with DeFi. And I think the protocols that are kind of positioned in that sense are going to disproportionately benefit from that adoption when it happens. And when that adoption happens, I think we're still underestimating what the scale is. It's going to be quite sizable.
It's funny because when you said DeFi and regulation in the same sentence, this is not normal. Because when you see the definition of DeFi, it's beyond regulation. It's to avoid regulation. So from my experience, I see from institutional adoption, old-fashioned reflex in terms to protect, and they don't have the good analysis matrix to come into on this business, and we need a lot of education, I think, to move on.
Yeah, and again, it depends what sort of category of institution you're talking about. You can talk about like a TradFi hedge fund that is, you know, a little bit more hungry for risk, and they can get involved despite the regulatory aspect. But if you're looking at a, I don't know, like a Norwegian pension fund, it's going to be difficult for them to get involved today.
Yeah. And in terms of strategy, evaluation, and market trends, what's one DeFi yield strategy you believe is underrated or overhyped since the beginning of this year?
I was going to say maybe not underrated, but I quite like the per Dex Vault airdrop farming. Sorry, that was a mouthful, but you know, you have these new protocols that are launching, obviously to promote their product. They have some pretty interesting incentives, and you're essentially gaining access to market-neutral strategies. So in a way, it's yield. And if you're able to get in early and identify strong teams, I think that's quite an interesting product.
Maybe on the overrated thing, maybe this is going to be controversial, but I think we're seeing that the restaking strategies, you know, I think have a lot of struggle to generate like actual yield, and that's sort of the initial incentives run out. You know, you're seeing that kind of go down, and I think it doesn't necessarily mean the fundamental idea isn't sound, or that in the long run there isn't something like very real there, but I do think it shows that it's going to take you know, quite a few years to do that. I think maybe two things on the side that I think are you know, I think work pretty well. Is one thing we've been doing is like leveraged staking, so leveraged ETH staking. So where you basically stake, use that as collateral, you borrow ETH for an Aave, and that is something that's been profitable for a long time. And maybe another thing that I think is maybe a bit underrated. So Bitcoin yield, right, is a big topic. Everyone's interested in Bitcoin yield. Now it's also very difficult to earn yield on Bitcoin. If you look at something like Aave, there's a ton of Bitcoin that's being deposited. Very little of it is being borrowed, even though you can borrow it at like 0.5% a year APY. But my understanding is that, you know, an interesting way you can potentially earn yield on Bitcoin is, you know, you deposit the Bitcoin in something like Aave, and then you borrow stablecoins against it, and then you earn yield on the stable coins doing some kind of farming thing, right? Because you could borrow it at 5%, maybe you can earn at 10% or more, and then you could sell that yield back to Bitcoin. And so that actually, I think when it comes to something like Bitcoin, feels like the most sustainable yield strategy, probably for the next few years.
What role do real-world assets play in the shaping the future of DeFi yield? Because we, in particular, in the emerging market, on different events like this in Hong Kong, in Dubai, and RWA comes from stronger with a stablecoin. We see a lot of new type of product and business model.
Yeah, I mean, I think first of all, real world assets, right? I guess the first one here would be stablecoins, right? Now, stablecoins, as everyone knows, right? They basically use the assets that backing the stablecoins to buy, you know, yield generating things like treasuries. Now, I think Tether, given a bunch of reasons, right? But first of all, because they're so massive and they have so much of a big head start, right? They, I think, don't really use that to incentivize, so they don't pass it back on to the on-chain USDT holders, but others do, right? Everyone else who has to kind of compete, right? They want to like get on there as well. So if you look at that, like the enormous amount of yield that gets generated by the assets backing stablecoins, and I think that is definitely I think a lot of that is going to end up going back to the stablecoin holders in you know variety of different ways. So I think that is going to bring like a massive source of yield on chain.
Yeah, and I think real-world asset will help with the point we raised before about hybridation. The fact having the capability to have on a tokenized way gold, different types of products we have in TradFi world will help with hybridation. For example, to create products with a mix of Bitcoin and gold. It's a very understandable product for anyone. So I think real asset will help to solve the hybridation points, and I think it will be one of the key differentiator to push on a mass market way yield generation and DeFi to anyone.
Now, if we can talk a little bit about the future outlook on DeFi yield. What innovations or trend do you expect to drive the next wave of sustainable DeFi yields?
I think simply to start, an improvement in sort of the user experience if you wanted to grow at scale. I mean, a lot of us here obviously are crypto native, but if you want to sort of address a broader audience, I mean, you guys obviously have a solution, I think, that caters well to a broader audience, but that has to be continued to be improved. Cross-chain integration, AI, I think actually will play an interesting part in terms of maybe risk assessment and investment or yield selection. And obviously we touched upon it several times during this talk, but regulation as well.
I come back to hybridation, a new time.
Favorite subject.
Yeah. But I think, and we covered that point, to limit the risk, you need to have something with different type of yield products to distribute your risk across different protocols. So I'm a technology believer, and I think in the future what will solve the difficult equation yield against risk will be protocol offering an abstraction layer to create products bringing the best of DeFi protocols and the capability to create hybrid vault with different product inside, like we have structured product in DeFi in TradFi world, but the capability to offer an hybrid product between offering native staking, the yield of the native staking, offering lending on the protocol, restake somewhere and so on, to have the best of the yield against the lower risk possible or the most distributed risk possible. So I think one of the future evolution we will see in DeFi will be the capability for protocols or institutions to create hybrid vault with a mix of products inside and a mix of protocol inside to offer the best of the DeFi ecosystem.
And how do you see the relationship between DeFi and TradFi evolving over the next few years?
Yeah, I mean, I think it's obviously going to continue merging, right? And I think that merging kind of goes in both directions, right? One would be that you're going to have more, hedge funds or traditional managers and capital sources that will do things on chain. But then I think the other direction will be that you have more kind of wrappers of some kind of crypto products that get brought to the sort of off-chain world, right? So of course the biggest one, most dominant one, something like the BlackRock Bitcoin ETF,
But then you can have, ETFs, maybe with staking assets, like let's say an ETH ETF, Solana ETF. But then you could also have baskets, maybe baskets of tokens, or maybe some sort of, security vehicles that are more actively managed, where there's more sort of DeFi strategies in there as well. So I think you will see it in both, going in both directions. And I think that's just going to be the future, right? Where these merge kind of completely, this borders is going to be completely gone.
Yeah, I just want to add to that because I think one of the most exciting areas is actually what you're mentioning about hedge fund strategies and alternative investment strategies coming on chain. In the TradFi, and these are like TradFi strategies, very difficult to get access to in the TradFi world, with very sort of high barriers to entry. But you now have top tier alternative investment strategies, private credit, fixed income, macro hedge funds that are coming on chain and actually gaining a lot of traction because you can essentially buy a tokenized version of these strategies for a small entry ticket. So I think that's a very, like what I call the digital fund. I think that's a very exciting space and it's great for like people chasing and looking for new sources of yield.
Right, gentlemen. At the end of the day, DeFi and stablecoin yield. This is a risk or an opportunities?
Well, I mean, it's obviously a huge risk for crypto, right? Because in the end, it's going to bring a huge amount of users and capital, into crypto and into Web3. So I think it's going to be probably the single biggest growth engine is the ability to earn yield in crypto. So it's a huge opportunity. Now, of course, there will be risks with it, and it being early, things will blow up. And, I guess we saw the biggest thing, which was Terra, which was like a massive blow up. And, I think we should expect that more things like that will happen in the future. Hopefully, they won't be too terrible. But, the volatility and blow-ups will be there.
Great, thank you. I don't know if you have the time for questions to the audience. No, but maybe a last word for the audience you want to share. Nothing special.
Last word? Yeah, just I'd say try and keep an eye on the developments and so the RWA / TradFi DeFi space. I think that's a very promising area.
Laszlo? No? Brian? Okay. Thank you. Let's applaud my co-panelists. Thank you very much.
Thank you.
Thank you.
Thank you.